Welcome back to Squawk on the Street. The Federal Reserve kicks off a two-day meeting tomorrow with a rate decision and Chair Powell's news conference on Wednesday. Our next guest is revising his U.S. GDP growth outlook lower because of trade fears and policy uncertainty. Michael Feroli, JPMorgan chief U.S. economist, joins us now. So what are we looking at for first quarter GDP, Mike?
First quarter, we're looking at about 1% GDP growth, which was probably not too much influenced by this morning's retail sales report, which was not bad, kind of a mixed bag, but overall still tracking, again, like I said, a pretty soft quarter, 1% is what we have now.
I think the question going into the Fed meeting is how Chair Powell acknowledges the softness, and does he stand ready to do anything about it, or will the market perceive it that way? What do you think happens?
Well, I think he has to acknowledge the data that has come in, and he will. But I think the trickier thing is going to be how he talks about the outlook. Chair Powell, for good reason, has been, cautious about talking about the administration's policies and what that could mean for the economy, though, of course, that's what everyone wants to know about, because the data we have right now, for January and February, don't really tell us too much about how some of these prospective policies, particularly on the trade front, will affect growth and inflation going forward.
Well, the big risk is if inflation sticks around or even moves up and the economy softens. Stagflation is a dirty word. Maybe it's not apt for this environment, but it does put the Fed a little bit in a tricky spot when it comes to balancing its mandate. How do they deal with that?
Yeah, it's always tricky when you have that kind of trade-off there. I think for the time being, I think they're pretty well prepared for that because they've basically had a message of being on hold. Certainly, we're going to see that on Wednesday and probably in May and perhaps even later if they really don't have any clarity on where these policies are going and what it means for the economy. So I do think if they feel like inflation expectations are stable, and there are some questions around that recently, but if that were the case, then I think they could address growth risk, but without that stability of inflation expectations, then they're really in a tricky spot.
Right, you mean cut rates?
Cut rates, yeah. I think particularly if we see further weakness in the labor market. The February report was just kind of so-so. I think there are some hints that we could see further weakening in the labor market, and I think that would be a big concern for the Fed. They're currently looking for 2 cuts as of December. We expect something similar in this week's projections, and I think those 2 cuts are predicated in part on some lingering concerns that the labor market may be softening just a tad here.
Have you taken a stab, Michael, at trying to model out, how the fiscal picture is going to change from here? Obviously, there's a lot of, spending program cancellations and layoffs, but it's hard to be too precise, I imagine.
Yeah, so, I guess there are 2 separate issues. One is DOGE and what that means. So far, we think the impact of DOGE is pretty trivial, actually, at least in the big picture of things. And then the second set of issues relate around to what Congress and the White House are going to choose in terms of fiscal policy, particularly as it relates to next year. And I think the easy guess here is that all of the tax cuts, which are set to expire at the end of the year, are extended. Those are popular. I think they could probably get a pretty good, a share of Congress. Well, I think Congress will extend those tax cuts. I think there's bigger questions as to whether there are add-ons for things like tips or Social Security. I think if there are, it's probably going to be, pretty modest. And so I wouldn't look for a big change in fiscal policy between now and next year. And as I said, I don't think the DOGE thing in terms of, the big picture of the deficit is really all that meaningful.
All right, Mike, thank you for joining us.
Good to see you.